Hello, Joseph Noy from NeuGroup here. A big thank you to the members of our cash investment group for sharing and learning with us at the first half 2021 meeting. And a big thank you to Clearwater for sponsoring. Here are a few takeaways I wanted to share. First, holding Bitcoin is a business decision based on a member sharing of her company's journey to buy Bitcoin to hold on the balance sheet. The decision to do so at this stage of the market is more likely to be a business decision than an investment decision. Purchasing and holding Bitcoin, in other words, fits with the larger business strategy to align with disruptive innovation, for example, or perhaps the next generation of the internet. That's not to say, though, that once the business decision is made by the C-suite and board, that policy and guidelines are not of value to help guide and govern how much to buy, where to store it, plus lay out the reporting and disclosure requirements for accounting and tax compliance, among other things. Thus, a crypto section of your investment policy could be on the to-do list someday soon. Second, new data and benchmarks needed. Even before you consider the new digital assets in the securities ecosystem of crypto, there are a number of new data sources and benchmarks that corporate investment managers are having to reckon with, thanks to LIBOR transition and proliferating ESG mandates. Clearwater has embraced conversations with members on what new data and benchmarks that they would like to see to help them manage, validate, and report on their investments. Finally, what do these ESG scores mean? The metrics questions are not always easy because it's not always clear what these new metrics mean. Take ESG scores, for instance. There are numerous score providers, plus asset manager aggregations of a proprietary nature that are not as readily understood as credit metrics in terms of what they mean in terms of investment risk. Since most cash investment is duration and credit driven, making ESG measures tied to long-term temperature or emissions reductions or climate impact relevant to short-term cash investment risk has a ways to go before ESG mandates and analysis expertise on the part of external managers replace credit-driven ones. That's it for me, Joseph Noy. For more insights like these, validated by NeuGroup members, visit neugroup.com. Stay safe and well.